Hey, what's up traders? It's Tyler from Fallible here, and today I'm going to be talking about the big $0 commission move that all the major online brokerages recently made. I'm going to be talking about how it impacts their business. I'm going to be talking about how it impacts us as individual traders. But before I do that, I want to tell you guys about the Macro Ops Collective because we're opening up fall enrollment this week until Sunday. And if you guys are interested in getting the best global macro research out there, some of the best global macro education, and really interested into leveling up your trading performance and drastically outperforming buy and hold, definitely check out this program. It's our flagship product. It's ran by Alex, our lead macro analyst, and I think anyone that's looking to really get to the next level is going to enjoy something like that. And one of my favorite parts about the whole thing is that we have traders from all over the world, ranging from sophisticated retail traders all the way up to full-out professionals that are managing millions of dollars at funds, and you get to be in that community. You get to kick around ideas with that community, and that's a really cool thing, and it's not really something that you can just easily find on the internet. So if you're interested in anything about that, guys, please go to the link in the description, click out on that, and read about the product before Sunday when it closes down for fall enrollment. All right, now let's get into this free commission talk. So if you go to the pages of all the major online brokerages, you'll see that they have zero commissions. They're advertising that on their front page. It's the big move that everyone's been making. And here's Schwab, TD Ameritrade, we got zero commissions, E-Trade, zero commissions, IBK are lights on commission-free trading, and then even TradeStation has something called TS Go. Now if I click here, I believe you can find it. Yeah, TS Go with commission-free trading. So all of these major online brokerages have gone to the zero commission model. Now, why are all these brokerages doing it? Why are they getting rid of this revenue source? Well, essentially they need to compete against each other, and as you guys know, Robinhood has been the major player in the zero commission brokerage model since they basically came out, and they've been stealing clients because that's a very attractive marketing thing. If you can tell a trader, hey, you don't have to pay any commissions, it's easier to get them in the door. And so all these other brokerages, these more entrenched players, they want to keep up their growth and their impact in the millennial market, so that's why they're moving to zero commissions. Now, the way they can do this is because brokerages actually make money in a lot of different ways, and commissions is only a portion of that revenue. So if you actually dive down into the financial statements of a broker, you'll see that they make money from other ways, such as not giving you all the interest that you're entitled, charging you interest on margin loan balances, making money off of any short positions with short interest fees, and also selling your order flow to market makers and high frequency traders and getting kickbacks for that. All right, so if you guys look down at this financial statement, I've pulled up something from TD Ameritrade, and this is one of their latest financial statements, and I went to the revenue section, and then you can see the breakdown here. So let's look at transaction-based revenues. We have commissions, which it's a pretty big portion, but we also have other things like order routing revenue, which is 117 million, and then other, which is 40 million. And then on top of all of this stuff, they have the asset-based revenues, which is bank deposit account fees, 421 million, net interest revenue for 383 million, then investment product fees for 151 million. So as you guys can see, brokerages can make a ton of money up on these other types of revenue sources. And these revenue sources are actually kind of sneaky, and it's harder for a mom and pop investor to actually figure out how they're getting charged. And if you go back to this financial statement, they kind of talk about what this stuff is. And for example, let's talk about bank deposit account fees. And it says, bank deposit account fees consist of revenues earned and recognized over time resulting from a sweep program that is offered to eligible clients of the company, whereby clients' uninvested cash is swept off balance sheet to FDIC insured accounts with the sweep program counterparties participating in the program. The revenues are based on the return of a floating rate and fixed rate notional investments, plus the actual interest paid to clients and other applicable fees. So there's a lot of fine print in this, and essentially what they're saying is any cash that you're not using, so if you just have cash sitting in a TD Ameritrade account, they're going to use that for their benefit. So they're going to take it and they're going to invest it in other things, and they're very safe things, so it's not like they're going to lose their money, but they're going to take the interest that you should really be entitled, and they're only going to give you a small bit of it and then take most of it for themselves. So that's how these companies can actually make a ton of money, is they get you in the door with zero commissions, and then if you're not active with your trading, they're going to take your cash and just make money off that cash. Now, another way that these brokers can make money off of your trades is something called payment for order flow. And what that is essentially when these brokers, they take your orders, they sell them to internalizers or other market makers like Citadel, and then those guys with that information, make money off those orders. And if you want to know more about this, I would recommend going to Twitter and checking out this guy named Themis Saul. He has a pretty popular thread going on October 4th with 242 likes, 88 retweets, and he's talking about how all of this works. And he's more of a specialist in this. And so I'm going to kind of go through a few of his tweets here. And he says, if a broker is selling your order to a market maker, whether old school or high speed evolved, that MM is buying it because they're making money by doing so, by sub-second quote arbitrage and data collection. It is a VIG. And he kind of goes to explain how all of this ended up being, how it's come to be, and why it's so prevalent in today's markets. And he even links out to a few posts where he talks more in depth about how this works and really what happens to your orders as a retail trader. So if you guys are interested in that, definitely check out this thread. But essentially, that's how these guys are getting around this $0 commission thing. So they're still making money, they're still banking, and instead of making it on the commission side, they're making it on with all these other techniques. All right, so knowing all this stuff, guys, how do you as an individual investor protect yourself from these sort of more hidden fees? Because the commissions are very easy to understand, but all of this off-balance sheet cash sweeping and all this HFT stuff, that gets pretty gnarly to understand. But I'm going to give you two key pointers that we're going to help you protect from these hidden fees. So the first one is, don't just let your cash sit in these brokerages, all right? There's no point of doing that. You can easily invest it in a money market ETF, for example, and earn the full interest. So let me go over to Investopedia here, and I just pulled up, money market ETFs for preserving capital. And money market ETFs are super low volatile, low risk ETFs where you can still earn a decent rate. It's probably going to be around 2% these days. And you can invest in these very popular ETFs by these famous companies such as iShares, Spider, Invesco. And putting your cash into one of these things, for example, if you don't really know what to do, you'll still earn that yield on that cash instead of letting TD Ameritrade or someone take that cash and earn it for themselves. So there's really no reason why you should let TD Ameritrade or Robinhood or any of these other brokerages, E-Trade, take your cash and make money off it. You should be fully invested at all times, even if fully invested means that you're just in a very, very low volatile money market fund, because at least you make that 2%. Now, the second thing has to do with order entry. And I read a lot of that Themis Saul stuff. I went to his site, I wrote his more in-depth articles. And essentially what it boils down to is you want to be putting in limit orders. You don't want to be putting in market orders. You don't want to be putting in stop orders. And the reason why is because limit orders are very specific. You say, hey, I want this price or better. But when you throw in a market order, then you're telling the market, hey, I'll take whatever price, I just want to get executed. And that's where the HFTs can really eat you alive, because you're not specifying a specific price, so they can play their games and they can make money off of your orders. And this is especially important when we're in very volatile markets. So, market orders are kind of fine when it's calm and nothing's going on. But if you send out market orders or stop orders with no specific price execution instructions, then that's how you can get absolutely crushed, because the spreads are much wider and stocks are zooming around 2%, 3%, 5% at a time. And so that starts to matter a lot more. So that's what you guys need to do on the order side, is make sure you're mostly using limit orders. So to recap, it's the cash management and use proper order types. Now, the last thing I want to cover is this opportunity that I think presents itself for people like you and me, individual traders that now have zero commission opportunities. And what I'm thinking here is there's many strategies that I've developed in the past or I've seen that look great on paper, but then when you put it post commissions, they were break even or losing. And these are typically higher frequency strategies that are trading multiple times a day. And those actually add up to a lot of money because you're getting so many occurrences, right? So instead of making one trade a month, and let's say making 10% on that trade, you're making one trade a day or 10 trades a day, each 1%, 10%, boom, 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 boom. And that adds up a lot. So I'm a huge fan of higher frequency strategies. It's just very tough to beat the fee structure as a retail trader. But now that we don't have the commissions to overcome, I'm wondering if there's actually an opportunity here for us to go back and look at more higher frequency strategies for ourselves and say, hey, this thing used to make an average profit of $20, but I had to pay $20 in fees and commissions. Now I don't have to pay that. So what if it's viable again? And I think a lot of people are going to be exploring this and looking into it while the industry sort of adjusts. And this would work assuming we can still get good execution. So if we can guarantee good execution and we don't have to pay any commissions, then there could be a lot of opportunity for higher frequency strategies for retail traders. And not on the level of market making HFTs where they're trading, thousands of times a day. I'm talking about, 5 to 10, that sort of thing. in. So definitely look into that stuff. If you guys have old strategies that weren't profitable after commissions, maybe go back and revisit those. I'm going to do some of that myself. So that's it, guys. Thanks for watching this video. I hope you enjoyed everything about the zero commission change in the industry. And before you go, I want to remind you again about the Macro Ops Collective, because that enrollment ends on Sunday, October 13th. If you're interested in that, please go to the link in the description, click that, and it's going to show you all about our premier global macro trading community. It's really one of the best on the internet, one of the highest quality communities on the internet. You know, it's not just a bunch of guys trading for fun. It's some serious people, guys that do this for a living, and you get to be surrounding yourself with that. And that's a huge deal if you want to try to outperform the market and really do the best that you can possibly do. So if you like the video, hit that like button, hit the sub button, leave me a comment, and I'll see you guys in the next one.